one question, probably one of the top questions we get in Forex Magnets, other than can we get one of your research reports for free, is what's the next hottest thing happening in the market? Like what's the big market, what's the big region, what's the next product? So our goal of today's presentation, of today's panel, is to speak about some of the hot things going on in the financial industry. They're not in the foreign exchange, but are still in the financial industry and have different ramifications what we'll be doing in the future. So, a little introduction. Everybody can introduce themselves, please, Ben.
Sure. Hi, my name's Ben Sears. I look after investors on Seedrs. We are an equity crowdfunding platform. Seedrs was set up and co-founded by Jeff Lynn, a securities lawyer in New York and London, and Carlos Silva, an IT wizard. On to Tom.
Hi, I'm Tom Robinson, one of the co-founders of Elliptic, which provides digital currency services to businesses and financial institutions. So we're really trying to bridge the gap between traditional finance and Bitcoin. So for example, our core product is Elliptic Vault, which is the world's first insured Bitcoin custody service.
My name is Travis Dahm. I'm a co-founder at Current Desk. We build broker management software, whether it's CRM management, treasury, compliance. In addition to that, we also have risk management as well for brokers.
And I'm Andy Casperson. I'm the managing director of financial services at Wicker. Wicker is a company founded by security and privacy professionals who strongly believe that secure and private communications are a fundamental right. And we've built, we have an app today that's used in nearly every country in the world to send millions of secure encrypted messages per day. Wicker is, expanding the use of its platform into financial services, and in a nutshell, we've created a means for companies to embed their compliance rules and build secure messaging using our platform.
I'm Philippe Gelis from Kentox. Kentox is a peer-to-peer foreign exchange platform for businesses. In other words, we are a marketplace where businesses can buy and sell foreign currencies to each other. We started 3 years ago, and we are close to reach our first $1 billion trading on the marketplace.
Hi. Hi, my name is Andrew Lane. I'm the managing director of Acuity Trading, and we specialize in big data, specifically visualizing big data in the form of news analytics and sentiment. So we can quantify every hour from millions and millions of news stories how people are feeling towards currencies or whatever it may be in terms of fear, positivity, confidence, etc.
Thank you. Tom, I want to start with you since we ended the startup competition with Bitcoin, so we'll go straight to Bitcoins and your company. So last year you came here briefly, you came into one of the evening parties, kind of introduce yourself and see what the type of the FX audience is like. I'm just curious, what was your feedback you got when you kind of came at that time about Bitcoins, and how's that changed now, especially when even the UK Chancellor is buying Bitcoins at the ATM?
Sure. So yes, you're right. So I came here last year and went around all the stalls and asked people what they thought of Bitcoin and whether they were engaging with it. And I received an almost across the board negative response, a mixture of incredulity, amusement, bafflement. And that, I think, reflected the viewpoint of the general population. But I think things really have progressed over the past year. I think at that time, a lot of the media coverage was around the illicit use of Bitcoin, things like Silk Road, money laundering. But now the focus has shifted to the technology, what the potential is there. And over the past year, we've seen over $400 million worth of venture capital funding go into Bitcoin companies. And so Bitcoin is becoming a lot more usable as well. This time last year, it was like making a Bitcoin transaction was like sending an email in 1980. Nowadays, there are very user-friendly services where anybody can use a credit card to buy Bitcoin, and that's really helping. The other big thing is regulation. So regulators are really starting to take notice, which is itself legitimizing the sector. So, for example, in New York, they are establishing a bespoke regulatory regime around cryptocurrencies. And as you say, the Chancellor here has started a program of work looking into the potential of regulating digital currencies in the UK.
And firms you speak to, like financial firms, what are they, at this point, are they seeing a certain potential in using Bitcoins, or are they just kind of still investigating and thinking?
Broadly, they absolutely love the technology behind Bitcoin.
Why is that?
They see the opportunity to do away with whole layers of their business and replace it with the blockchain technology. So this idea of being able to securely and transparently transfer ownership of assets, they see huge applications for this. But they still won't go public about this because they see a risk of becoming associated with Bitcoin, the illicit currency. So there's still a legitimacy issue there.
Okay. Moving on to Philippe, you're also in the payment space a little bit. How did you come to, you created a P2P marketplace for payments. So how did you get ripped off of the bank one day and you're like, I got to fix this? Or how did Cantox come to be?
The story is a bit different. Me and my co-founder were working for Deloitte as consultants. And at some point, we were working for a client exporting cava, which is like the Spanish champagne in Barcelona, to the US. And they had a lot of issues with FX. And we tried to help them really manage better the FX, get better prices. And we discovered that it was really hard to get transparency and fair prices from banks. So we tried to find a solution, we brainstormed a lot, and finally we came to the conclusion that through banks, it would be really hard to have transparency and fair prices. So we thought about something much simpler, a platform, a marketplace, no banks, direct exchange between businesses, much easier, much more user-friendly and transparent. So it's really a problem we identified with a client that brought us to build Cantox.
Was it a technology problem that wasn't existent, or is it that the banks just created these barriers that was very difficult to be able to find the transparency and work with multiple ones at the same time?
No, I think that the problem of non-transparency and really a large spread in deliverable FX is simply because a banking oligopoly is organized in a way that they promote opacity and they just build and manage very profitable business that way. So it's not a matter of technology. Bank will be able to give very tight spreads and transparency just as they don't want. So we are just trying to push that transparency in the market, knowing that banks will never do that simply because it's not profitable for them to do so.
Okay. Also, I guess, changing a little bit the way how existing companies are doing. So Ben, if you tell us a little bit how Seedrs came to be and how crowdfunding.
Sure. So Seedrs was really founded on two common problems. The first was that businesses just weren't getting access to the capital that they need to grow, quite often at the seed stage. It was too early for venture capital firms, too early for lots of angel investors, and the banks just weren't really lending. The second problem was that angel investment offline is an incredibly archaic and inefficient process. Involves external legal firms, accountants in many cases, really only there for the 1% of wealth in the country that has the time and money to spend quite high minimums getting access to individual deals. So Seedrs really stepped in as we're now the most active platform for discovering and investing in startups and high growth businesses. We make it possible for investors to invest as much or as little as they like in great growth businesses that they choose through a very simple online process. Equally, we allow ambitious growth-focused businesses to raise the equity capital that they need to grow from friends, family, other investors and institutions.
How do people know that these companies aren't going to just run away with the business, run away with the money, or pull off a terrible product?
So coming back to regulation, we spent the best part of 3 years working with the FCA to develop, what is arguably one of the most robust frameworks that we have globally. But regulation is absolutely key here. We're talking about opening up this pool of the 1% to the 20% of bright people like you guys who are able to demonstrate that they understand the nature of the risk of getting involved with startup businesses. It can be very, very profitable. Cedars kind of goes over and above this. We are the only platform that operate a structure where we hold shares on behalf of all of the underlying shareholders. And that allows Cedars to put in place a very fundamental 4 or 5 key investor protections with every business. We require every business to report on a quarterly basis at least back to us so we know what's going on. And every single campaign that's submitted gets fully vetted by our team of lawyers to make sure that what they say they are is actually what they are.
Once you start getting that sophisticated, do the fees just become too high that maybe it makes more sense for someone to say, I'm not going to do crowdfunding, I'm just going to find an angel investor and make it more simple?
Yeah, I think people often underestimate the power of the crowds. It's the average.
Does the power of the crowds, add up to have higher fees?
The power of the crowds is phenomenal. We forget that the crowd is made up of people like us. In fact, our average number of investors per deal is 170 people, all of whom are very, very engaged in that business, just as an angel would be. And we often find that they're willing to help out as much as possible with that business's growth. Equally, they may be customers, which by turning into shareholders create better customers. So there's a great value there over and above one single angel investor and a lot of wisdom.
Okay. Travis, so when you started out, you were doing it's like money management with MetaTrader. So I guess the first question, would you have done equity crowdfunding when you launched Current Desk?
That's a good question. So as you know, we just did a round of funding several months ago, and one thing that we noticed is that and I think can I ask a question? What's the average investment of somebody that's funding one of the projects? Like, do you have an idea of the average in the 1,000, 10,000, 100,000?
£1,000.
£1,000. Okay, so what we learned is you have a couple options. You can try and go like super angel and get a small amount of capital. But what we learned is that those people don't necessarily understand your business plan and the fintech environment. But with what they're doing is it's £1,000. So people are willing to, they don't have to fully understand it. And so I could see how a group of people would be more than willing to do that. Versus if somebody's coming on as an angel for a few $100,000 or $1 million, they're a high net worth individual, but if they're like a mom and pop, they're not going to invest in that because they just don't want to tolerate the risk because they don't understand it. So in that case, you really have to go over towards the VC, the family office angle, and try and take that approach. So I totally get how you guys are running your business. I think it's fantastic. Would we have done that for Current Desk? Probably not. But I would have been open to listening and learning about it.
Sure. Okay. You touched a little bit about raising money. I think every company has done a round raising. There's been a lot of talk that you have, fintech money going into fintech is a bubble, and all this money's pouring in massive amounts of money. But on the other hand, you speak to people and they're saying, well, people don't really understand. I'm talking to companies and saying, when I go to raise money, people don't really understand what we're doing, or they, especially in the capital markets and fintech, it's sometimes you have to find specific types of investors that are more into that company. So I'm just wondering if you can give me like how did it go for you guys when you raised money? We start with Philippe.
We created the company in June 2011. So let's say that we really started in late 2010. Believe me, at that moment, when you were speaking about fintech to investors, they were looking at you like, fintech? What's that? It was something so new that no one had any idea of really what was fintech, if it was a big opportunity. That's true that now it's fairly different. The market is really hot. There are very big investments, big valuations. Are we
in a bubble though?
It's always hard to say. What's true is that it's definitely not comparable to what we named the bubble 10 years ago, simply because I think that all of the companies here have business models, revenues, so then you can consider it's expensive or not. but meaning we are all generating business, generating revenue. So maybe now it's a bit more expensive than 1 year or 2 years ago, because remember 2 years ago, valuations were really low when we started. But what's true is that the space is really, really big. If banks start building venture capital and investing in fintech, is that they really, in some way, confirm that the space will change a lot, that opportunities are very big. Mm-hmm. So I don't really think it's a bubble, but it's really that people start seeing the opportunity as really big, and the market is moving.
All right, what about Tom? You mentioned there's like $400 million that's gone on into Bitcoin companies this year. I mean, that sounds a little ridiculous for what earlier was saying there's only $18 million a day in transactions.
Well, sure, but I think investors recognize that Bitcoin is an innovation of the same kind of magnitude as the internet itself. So if you look at the amount of money going to Bitcoin, it's equivalent to the internet in 1995, and I think we are at a similar level of stage of development as the internet was then.
Mm-hmm. Here we are speaking about FX. Almost anyone is in the FX space. When you think about the market, it's 5-point-something trillion a day, and 90% is speculation. So in some way, isn't it ridiculous to have so much speculation? So I have not a big knowledge about Bitcoin, but I don't know if it's ridiculous to have so much money in Bitcoin. What's true is that it's something with a huge potential. Then let's see what happens.
So you're saying a lot of the money that's flowing into fintech is based on this untapped potential that we're just discovering now, and we'll know in the future if everybody's right or not. Okay, that makes sense. Obviously, news is an important part that's funneling a lot of this fintech revolution that's taking place. So Andrew, your firm does a lot of sentiment and analysis of news and social media. How did you get to creating that company?
Well, it came from the time when I was working at the Wall Street Journal and Dow Jones, and I guess we're talking about trends here, and I've always seen trends that products that start off with the institutional sphere gradually fall down into more the retail sphere. And so I created and curated a product at the Wall Street Journal that looked at sentiment data for the Wall Street Journal selling to hedge funds. I also saw at the same time that the internet was exploding, and we went from 3 main providers of information 30 years ago, which was Dow, Bloomberg, and Reuters in the financial markets, and now we have an exponential amount of people talking about FX and whatever it may be, giving their commentary, analysis, and news. And there's no one trader who can keep on top of that. And so I started thinking about how to visualize big data. So instead of just selling data to hedge funds for them to crunch and create profit on, we started trying to work out how can we, first of all, bring a very high-tech technology to the retail crowd or the online crowd at a reasonable cost. And then second of all, how do we overcome this issue in a visual way instead of using algorithms? And so that's how it really came about. And precisely the idea came from me when I was sat down at a trading desk in Madrid in BBVA, and the guy told me, if you're here to sell me news, I don't want any more because I have far too much and I can't physically read all the news that's coming down my screen. And that gave me the idea.
So as you mentioned earlier, you're creating a method to visualize the news or the sentiment. I'm just curious, when you were first creating the product with your co-founders, did you imagine that traders are going to use it one way and that brokers would be marketing it to their clients in a certain way?
Yeah.
And how has that turned out? Are you like, what you were imagining is that like I created this product and it's going to be used this way, or is the market kind of looked at it a little differently and tried to?
Yeah. So very much, and I don't know if all these guys have the same experience. I came at it with an idea, looking at the industry, thinking, right, I'm going to create this product. And my product now has come out completely different to how I envisaged it. I looked at the rise of social trading, people doing algorithms and trading on FX, and I thought, why don't you supplant sentiment data onto that, and people can trade off that directly? And although people can do that, we're willing to let data flow out in that field. where we've ended up is actually somewhere where more in the visualization sphere of creating. Traders just want to be able to come onto a screen and understand something straight away. And that's what I wouldn't say we've won the battle yet, but we're definitely at 95% of the way there of visualizing how people feel. And of course, if you can understand how people feel today towards euro dollar, you have a good idea of what's going to happen to euro dollar tomorrow.
Mm-hmm. Okay. Speaking about a product that's kind of changing, evolving, so just want to ask the audience a question. How many people here are still using how many people use email as their most important way to speak with clients and to colleagues? By raise of hands, it has to be too shy. Okay. Actually, better. Who doesn't use email as their main way to speak to clients? Okay, one person. Anyone else? All right. Does anyone use WhatsApp, like internally, or to speak to clients, or with colleagues? Anyone? Okay. Anyone heard of Snapchat? Okay. Anyone used it? No. Anyone used it because their teenage kids were using it and they had to figure out what it was? Okay, so, and you can maybe tell us a little bit about what Wicker's doing and how it's the changing of the communication.
Sure. And I think, I wish I could sit up here and say that we're going to be able to do away with email and everything else. Obviously, it's it has a fair amount of traction, but I think what we've seen, and we've been talking a little bit about how we got started. Wicker really had its roots in, our first use case was not in Fintech, but instead trying to come up with a way to connect journalists and sources, particularly who may be in situations where there's a hostile government or that the stakes are a little higher than pictures of teenagers and whatnot. So we built the platform with strong military-grade cryptography, and that's easy to use. And as we went through the process of getting funded, what we found was that there was a lot of demand in fintech. We had initially expected, we had built something that for consumers was allowed them to control. Hey, when I send you this data, I want it to live for 6 days or 60 seconds. And knowing the compliance environment in financial services. That would be, definitely a mismatch for, the rules around retention and everything else. But as we brought on investors like Jim Breyer, who's an early investor in Facebook, as well as the CME Group, what we found was that there was a lot of interest in saying, well, there's a lot more that this platform could do, particularly as it relates to helping people enforce information barriers or to create channels for customers and folks in our industry to connect to customers in a channel that isn't cluttered like email today, or isn't where there's contention of where you're dealing with spam, phishing, and those sorts of things. That the core of Wicker's technology allows that the messages that you create never leave your device in an unencrypted state. A lot of messaging platforms today, whether it's email or a chat provider like Bloomberg, there's an intermediary in the middle that you need to trust, not to eavesdrop on your conversations or potentially, turn the records over to a third party. Wicker, we operate a platform because implementing encryption is hard, but at the same time, the platform we run is zero knowledge, such that it's the parties on either end hold the keys.
So last week we had all the global regulators put a bunch of different fines on the FX fix scandal, and a lot of that had to do with a lot of we won't name which company, but there was a intercompany chat room that had a lot of traders that were involved with as far as rigging the FX rates. So your product comes from a consumer product, yeah, where you could do this, exploding messages and then it's untrackable afterwards. How does what you're doing in the financial world fit on a regulatory side? Because we think that this is actually less compliance and would be a problem for what the market's already seeing, and had to deal with last week.
So I think you need to look at it in a couple of different ways. One being that, existing platforms today were built 20 years ago and didn't have retention.
When you say existing platforms, you mean email
or
yeah, other intercompany type of thing?
Exactly. And so, that what we've seen, and again, I can't necessarily speak to exactly kind of what gave rise to, the conversations that were happening last week, but, the idea that, that email is somehow, email doesn't inherently have security, doesn't support retention, and so there's a great deal of kind of layering that needs to be done on top of those existing platforms since we're building a new messaging platform from scratch, we're looking to embed compliance rules from the beginning. That are, what you see in a consumer app today, which is allowing people to set timers on data to self-destruct, and is 1 second to 6 days is what's in the product today. When we look at financial services, the ability to control, when I'm as a data creator and I want to communicate to somebody at a third party. Maybe I'm subject to a rule that's enforced by the client that I'm going to have to CC my, my archive or my compliance department, and so that's a built-in, inherent in the client, and without having to do a whole bunch of other layering. Which, if you kind of look inside the back office of an email system today, the way a lot of that is accomplished is that there's a mail spool with everyone's messages that 50 people have access to. So it's and I think the real risk, the other piece here is that the real risk of the response to the fines and the actions of a few bad actors are going to be a great deal more regulatory scrutiny and restrictions on and layering of cumbersome security tools on existing platforms like email. And it's going to drive people out of those platforms into places that aren't monitored. And so we're trying to bring something that's easy to use, that people want to use, and that can, don't have the high hurdles of and overhead of, enforcing compliance, and doesn't create risk of, every company sits on essentially a toxic waste dump of its old messages.
Okay.
Yeah.
Speaking about sensitive client data. So Travis, your product is, does a lot of different things in the back office for a lot of brokerage, and you're handing, you're a third-party company that's handling sensitive data. How do you handle that? How do you secure it? And I guess also, can you maybe talk us with how you present that to your potential clients? Because I assume this is one of the most important things that comes up. Like, how do we know you're not going to resell our data?
Yeah, so it's probably one out of the number 2 questions that we get. Where's my data? What's going to happen to it? And can I keep it so you don't have access to it? So, I mean, obviously there's, we have live monitoring. There's, standard firewalls and encryption, all that stuff. It's a really hard line to cross and to explain to the client. I mean, we live in a digital world, and we all live in the cloud now, and it's just going to continually get more cloud and more cloud and more cloud. That's just the way the world's moving. So to be completely honest with you, it really comes down to a relationship, and giving them the answers that they need, which are truthful on what you're doing with data. And so when you're talking to a technology provider, there's specific things you should ask them. Are they using safe harbor and European data protection standards? Where's the data being hosted? Even do they have access to the data if they want to visit the center once a year? And so you can make them comfortable by giving them those options. But at the end of the day, the data's in the cloud, and it's only as secure as any one person can make it. And unfortunately, there are smarter people out there, and unfortunately, even worse, some of those people are bad people. So it's secure. You give them the comfort level they need, answer their questions, and hopefully they are comfortable enough to come on board.
Okay, but I guess one of the advantages, though, as being a cloud-based company and more of like a SaaS type of model, is you are able to provide some sort of efficiency to companies, and it makes would you say it makes it easier and quicker for like new companies to be able to launch? So how does that affect like incumbents? Are we going to be having like this disruption, like this broker disruption taking place because it's so easy to be able to like launch your own brokers, and you don't need your own products now, even from the back end or the front end?
Yeah, so I mean, the answer is yes, right? Because I want everybody to use my software. No, seriously, it's all about efficiency at this point, because you do have, you have the small to medium, the new brokers out there, and you've got legacy brokers that are, they're a machine and their wheels are just turning, but they have massive staffs and massive sales and massive marketing budgets, and so they can just continually market and continually acquire new clients. But the advantage that you can give to these smaller to medium or boutique type brokers is you can give them an efficient solution to where they can reallocate their resources, so they don't have to have that massive back office staff, and they can really put those people towards something that's not cost prohibitive but revenue generating. So put your staff in something that's generating more revenue, because you don't need all those people manually doing these processes anymore, because everything's automated. In addition to that, you know, analytics, and you have the data that's coming in, and if you have a good efficient system that's pulling the data in, you can tell your client or tell the broker where to spend their money. You know, most brokers are running marketing campaigns, and you know, they may have multiple campaigns running, and they really look at them from the surface. You know, on this campaign I've generated these many clients and this many clients, but a lot of them don't look at the actual revenue that they're generating. So they may say, this campaign's generated me, you know, 100 clients, and this campaign's generated 10. But in reality, which campaign generated you the most revenue? And so if you put at their fingertips the ability to pull those numbers, find out where to spend their marketing budget more efficiently, then they can start acquiring that market share.
Okay, so basically you're saying if a company's smart, they're going to focus on what they do best and then try to use technology to take care of the rest and, you know, optimize it like that. And
yeah, it's that, or else you grow into a legacy machine and you just keep, you know, trying to keep the wheels moving.
Sure. Okay. Let's move back to Ben. So Cedars did something very, I guess maybe the first time, or something unique. So on your equity crowdfunding platform, you actually had a public company that trades on an exchange issue equity on your exchange. This is done before they actually went public. How did you guys pull that off? You know, or how does a company that's already public sell more equity on a crowdfunding?
So that happened last month. There was a company that was listed on the ISDX exchange called Chapel Down. They make some really fantastic English sparkling wine. I apologize to Philippe earlier for that. They really are quite good. They're a £25 million market cap company with assets. They have a share price which has done very well. They had access to traditional forms of finance. They actually chose to come through Cedars to run their campaign because it provided a phenomenal opportunity for them as a marketing and PR campaign to lock in some of those customers, prospective customers, to become shareholders. And really Cedars just acting as the efficient distribution mechanism to the retail market.
Do you think we're going to see more companies that are public doing this?
Yeah, it was funny because after the success of Chapel Down, in fact, that we raised about £3.9 million in around 3 weeks, which is really impressive. It was much to do with their own campaign. But we had a couple of other listed businesses get in touch pretty soon after that. And, you know, the question is, you know, can a copper mining company captivate an audience? For Chapel Down, it was about this great, you know, invest in England sparkling future, and it really, they also had a discount mechanism for their customers. So anyone who put, I think it was somewhere in the region of over £600 into the shares of the business, was also privy then to a 33% discount in their wine and beer and cider. Which was really interesting because I think, you know, the combination of rewards-based crowdfunding with equity was very powerful. Quite whether the copper mining company can captivate an audience like that, I think really what we need to see is a mix between passion and profit. And sometimes campaigns may lean slightly more toward one than the other, but we need to see a mix of both in order to captivate the audience.
Mm-hmm. So when an investment bank would be underwriting a company, they pretty much have to do the marketing on their own. You know, obviously you have the investor roadshow, but they're the ones. So you're saying when it comes to someone's doing a crowdfunding, it's more on the company's onus to really promote themselves.
Yeah, absolutely. Okay. I mean, the thing that kind of really excites me from a, I guess, not so much of a disruption perspective, but, you know, Chapel Down really showed that crowdfunding has come of age. And when I look out 1 year, 2 year, 3 years down the line, there's no reason why the next kind of Twitter IPO shouldn't be partially at least crowdfunded.
Sure. Do you, I assume it also was able to attract existing banks and brokers that were saying, hey, maybe we can partner, do our own type of crowdfunding or partner with you guys. What are you maybe tell us a little bit like the conversations, opportunities for maybe brokers in the audience?
Sure.
What they could do.
Yeah, well, I happen to look after our partnerships. So anyone who wants to come and have a chat about doing some work together, then very, very happy to. We have a really deep investor pool all over Europe, and that consists of, your very small £10 investor that comes to the platform because there's one particular business that they really want to back, through to large angels and institutions who are investing £100,000, £150,000, and using this as a way of getting exposure to this phenomenal new asset class. So yeah, we're open for business. And
so brokers are, have people are you getting feedback? People are saying, wait, this is a new product that I could be pitching to my existing clients as a new revenue stream. Okay.
Yeah, so, and that's twofold. One, on the business side, where corporate finance houses look after clients, and actually they think that equity crowdfunding could be really suitable for them. Equally, on the investor side, any investors that come via brokers to us, we do a fee share agreement with. So, yeah, there's deep opportunity there, I think.
Okay. Tom, one of the, I guess, Bitcoin 2.0 that's taken on with Counterparty and Ethereum is this way to take a P2P exchange. It doesn't have to necessarily be Bitcoins. It could be really anything. It could be a digital crowd equity. Where do you see that market of P2P exchanges going?
Yeah, so this is the idea that you can completely disintermediate these kinds of exchanges. You don't need any kind of intermediary or trusted party to action trades. You can instead build it into the Bitcoin blockchain, and you can do that because Bitcoin transactions have this fantastic property whereby it's programmable. It has a programming language built into it, such that you can make payments which are conditional on other things. For example, other payments. So that means you can settle transactions without any trusted third party. That works as long as all the assets you're trading are represented on the blockchain. There are limitations if you want to trade things which aren't on it, and you probably will require another third party. But I think there's huge potential here. Just yesterday, a peer-to-peer Bitcoin exchange called CoinFin raised a lot of funding from a bank in Spain. And that's particularly, this was the first investment by a traditional financial institution into a Bitcoin company.
How do we bring liquidity to a P2P digital exchange? You can set it up. They can raise as much money as they want. But if you can't get those shares of Google and Apple and whatever everybody wants to trade, then you're not going to have the buyers and sellers.
Yeah, I don't have the answer to that. It's a good question.
Okay. So, Philip, when you created your P2P currency exchange, you initially started as real peer-to-peer, correct? And then you've since kind of integrated it with dedicated liquidity providers. Why did that take place, and how has that affected the platform?
It was mainly a demand from clients. So when we started, it was pure peer-to-peer, pure marketplace. So someone is selling and looking for someone to buy. The problem with that is that when you start getting bigger and bigger clients, they want to trade bigger amount, they want to trade some exotics in some cases, they want something very fast, and usually they want only one provider of FX. So if we wanted to get all their business, we really needed to have full liquidity, spot, forward, any currency, peer-to-peer, or full liquidity provider when we cannot match our clients. So basically we did it because we understood the client demand, and we knew that it was the smart way to answer the demand. Mm-hmm. So we just did it because it made sense. And finally the client looked at transparency, online solution, user experience, fair prices. So it was a simple answer.
So ask the last rounds of question here. One issue that I tend to get a lot from people I speak to about the B2B market in the FX is people are complaining that it's very difficult to hire people, to find employees to be able to do it. So I'm curious, as fintech companies, a couple of you guys were hired and you aren't finding, like, how are you seeing it, and how are you finding to be able to attract new talent? So maybe Andrew.
Well, I have more experience from where I came before, and we're now hiring people now. But the issue is, one is location-based, is having people, for example, we're very much focused on the FX market, the online market, so having people in London and New York where cost of sales is higher. But I've always felt that you have a two-way system. You can hire someone who's younger, who has less experience, but has more drive, or you can hire someone who's older, like myself, who will just sit back in his armchair and contact all the people he knows. And I think it's about having a mix of those kind of people. And then in terms of fintech, I think it's people I speak to in the industry that we're in, who work for banks or brokers. Everyone wants to work for a fintech firm, something that's breaking down new boundaries, something that's exciting. They want to launch a new zeal into their career, especially the people who are more experienced in selling. Their thinking is, well, you know, I'm paid 150 grand. Yeah, I can go to that firm and earn the same money, but I'm just doing the same old crap, the same old for a different company. Whereas if you come to a fintech company, you're like, wait, there's a bit of risk in it, but excitement.
So the bottom line, you would advise companies to find someone more driven, even though they're less experienced, and live with the learning curve of coming to understand a new product.
I've lived and breathed sales now for 15 years, and I've done lots of courses, and I love the theory behind sales. My experience and what I tell myself is you've got to have a mixture. You need people with experience, and you need lots of people who have got the go to go out there and get the business, who are younger and have got the energy. But that doesn't help you if you're just hiring one person. But I would say the first person you've got to hire is someone with experience.
Okay, and what about you, Philip?
I see that hiring smart people is always hard anyway, fintech or not fintech. In our case, when we started, it was almost impossible to hire experienced people because people in banks usually are well paid. So when you start a fintech company with low salaries and a lot of risk, they don't feel really comfortable. But what we learned then is that you need, in some cases, very specific people with a long experience from banks or brokerage, for example, in payments, settlements. But then we also learned that if you bring young people, smart, with a lot of energy, usually they fit much better than people with their own experience coming from the banking sector. Mm-hmm. So now we have a balance of maybe 10-20% of people from the banking industry and 80% that are newcomers, outliers.
Okay.
One thing actually I would say to what Philippe was just saying, that one person who I respect in the industry, he's worked in for many years, he once told me that he refused to hire anyone who comes from the industry because it didn't bring fresh ideas into the role. I can understand where he's coming from.
Mm-hmm. So, Andy, I mean, how do you deal with it? Because you're coming like a new product in a whole different industry.
Yeah, pretty similar strategy that we're following to what Philippe was saying in terms of, you know, it's you look at where we are in San Francisco. We also have operations in the New York area. So there's, you know, when we were first in the middle of our raise, it was very difficult to convince people to come on board, particularly ones who were experienced. But what we found is that we've got a small core of experienced people who are able to ramp up, you know, the younger and less experienced folks, or again, people who are bringing, you know, with us being in the security realm, it's like I'd rather have a guy who really knows his crypto, as opposed, and turn him into somebody who's knowledgeable about FX. Sure. It also helps having, you know, the size of your Series B announced in the newspaper.
Well, I guess before the Series B.
Yeah.
What about Travis? I know you're, you know, currently having this problem as far as finding people.
Yeah, so when we first started, we had the approach that, you know, we want fresh people. We don't really want people from the industry. And that's the approach we took with our developers. And we're really thrilled with how that worked out because we have a lot of fresh approaches that come from that. From the sales side, I guess it's product dependent, right? Because a lot of times our flagship product, Current Business, gets misrepresented as just a CRM when it's actually an entire broker management suite. And it's really hard for people to comprehend and understand that it's more than just a CRM. And so we're changing the direction that we're looking for people within the industry to sell that product, because at least they have a base knowledge of, you know, what entails a broker.
But do they need to have on the sales, which is very important for a lot of B2B companies, do they need to have both a financial and a technology background or understanding when they're selling it?
It's a struggle. I prefer financial if I had to, just because the systems used within the financial industry, technology, they can learn, they can understand little aspects of it here and there.
Okay, just finance or tech, what would you guys prefer on hire? Ben, 'cause we're running out of time here.
Finance.
Finance. Tom?
Tech.
You already said finance.
Finance.
Andy?
Tech.
Tech.
Finance.
Finance.
Finance. Okay, finance wins. I guess unless you're doing Bitcoin, then it gets a little more difficult. Questions from the audience? What do you say? Because you're also B2B, finance or tech?
Well, we would look at tech. So Tom Higgins, CEO of Goldeye. I'm just interested in the hiring side. We have a strong graduate program which we've built up with the universities near us, and I'm wondering what everybody else does on your side of the fence.
I can't speak to myself on that, but I think that's a great one. I think you come from Surrey University area in Guildford. There was once this company that I knew that it was a recruitment company, and they specialized in taking only graduates and training them outside of the company in sales efforts whilst they were working on the job. So you always have this issue as a graduate coming out of university, you don't have any skills or experience, but no one will give you a job to get that skills or experience. So I think that's a great idea.
Just going to add on him. Is anyone here getting feedback from universities that are looking to do internships or some sort of combinations when it comes to looking at hiring?
So we, for example, sponsor the Oxbridge Bitcoin Society, and we find that's a really great way of attracting talent through that.
Next question. Okay. I want to end with one last question. Okay, so everybody's obviously enjoys doing what they're doing and really loves the company they work with. If you had to work in another type of fintech sector, other than what you guys are doing, what would you be? What type of sector really interests you? So you, Andrew?
Just off the top of my head, something that's really interested me is microfinancing in a third world. If that can be called as fintech, but I think that's a really interesting area.
That's going to be, I think, Philippe's next part there. Right? So.
I would probably build a fintech bank, in the sense that I think that all of us, or at least many of us, need banking services. And banking services as they are today are not really well suited to what fintech companies need. So I would probably build a fintech bank. So a bank with a banking license, 100% digital, really based on technology.
It's maybe not. It's not exactly what we're in right now, but I'm very interested in. I would be very interested in working in the Bitcoin alternative currency space, and it's kind of a hedge because we are working with some folks in that space.
Well, you're in securities, so
yeah. Well, and that's the elegance of the blockchain and everything else is going to be is going to play a role in the future of the internet, just like we're trying to do with our platform. So.
Well, because I come from the management side, I'm still always intrigued with the algos, and still in close contact with my former business partner and the stuff that he builds, and just intrigues me the stuff that they can build. That's, I guess, from the fintech side. Outside of that, I really think behavioral software and how you can influence people to do different things based on information that you have. I think you could take some of that and apply that to the financial side and do some interesting things.
Okay. Tom?
I think identity is fascinating, and how the arbiters of identity are becoming the social network operators. There's some very interesting projects going into decentralizing identity verification. For example, MIT's Open Mustard Seed project is really interesting.
Ben?
Personally, I think we're starting to see more and more Bitcoin companies coming through. It's not something that I know all that much about at all. So I'm going to ask you, Tom, to explain from basics afterwards to inform me. But I think it could be a really exciting area. We're starting to see a number of campaign submissions coming through which are centered around Bitcoin. I think it could be transformative, and I think it could be much bigger than we all realize.
Thank you very much. Thank you for listening.